BlockFi, which is going through its own bankruptcy proceedings now, is looking to collect money from the other bankrupt empire, Sam Bankman-Fried's bankrupt empire, including from Alameda Research, to the tune of $680 million. Sonali Basak is here to explain the dispute and the huge amount of documents you've been wading through.
There has certainly been a lot of legal documents because, of course, there are multiple bankruptcies as well as a lawsuit. So let's bring you through this for a second here, because you have money that BlockFi was owed from Alameda, as you said, $680 million. And then FTX had also had a credit line over to BlockFi. They are owed $275 million. They had a credit line in which they were not able, BlockFi was not able to get the entire extent of their money. And remember, when it comes to the money that they lent to Alameda, interestingly, BlockFi is seeking the collateral, and they're doing it in the means of a separate regulatory filing here. Now, I'm holding here BlockFi's lawsuit against Emergent Fidelity Technologies. Remember, that is the company that had bought the Robinhood shares. This entity is not included in the bankruptcy filings, which is what makes this interesting. Interestingly, also defended in this lawsuit is ED and F-Man Capital Markets, which had held the collateral that is being disputed here. And according to the Financial Times, which saw the loan documents between BlockFi and Emergent Technologies here, Emergent Fidelity Technologies, the collateral in dispute is the Robinhood shares.
So they want them back.
They want them back because this is what was liquid inside the Sam Bankman-Fried empire at large. Remember, this is not an entity that is in the bankruptcy proceedings when it comes to FTX. However, that draws a lot of questions in terms of how BlockFi gets paid and, frankly, how other people get paid, because BlockFi wants to get paid to pay everybody else.
This is deeply confusing for many. Ultimately, you hearing from lawyers how likely they are to get a significant amount of the $680 million thereafter back?
You know, it's an interesting question, because $680 million in the scope of billions of dollars here, it's a significant amount of money, especially when you look at the rest of what BlockFi's creditors are owed here. Remember, a large group of creditors are owed $725 million or so. So that means that 650 would really help on that regard. But something interesting to just kind of bring you into the background here, I spent, again, another day with the bankruptcy experts and lawyers. And something interesting they told me is one thing that hasn't happened here yet is creditor committees getting together, which could become very interesting. Because in this instance, if you watch a normal bankruptcy play out on Wall Street, you're seeing big creditors, you know, big hedge funds or private equity firms band together to get their money back or fight against each other. But in this case, because the depositors are key here, you might see more aligning of interests between these big institutional investors and the customers themselves that are working with trusts to get their money back.